In this video, I'm going to be talking about my current thoughts on the stock market, showing you my growth stock portfolio, which I haven't shown in a while, just because not too much activity has happened in there. I'm slowly dollar cost averaging into some of these positions, but no major moves. And then on top of that, we'll be talking about my TFSA portfolio at the very end and what I did this past week. Hey guys, welcome back. If you guys have been looking at your portfolio, you've probably seen a lot of red, especially those of you guys who are growth stock investors, like myself. And yes, it kind of sucks to see our portfolios go down 10%, 20%, or even 30%. But that's kind of the name of the game of investing in growth stocks when you're playing in these volatile times right now. Especially since the market has come off all-time highs. I mean, the market's pretty much always making new all-time highs, at least in the past 10 years. But that's kind of besides the point. The market is always chugging along because the economy, for the most part, is growing. I mean, we haven't seen really a shrinkage in the US economy, and maybe this past year or two, yes, we did see a shrinkage in the economy, but the market was propped up by the Fed. And I think people are looking forwards right now, seeing that the Fed is going to be raising interest rates and there's that fear. However, for some reason, that fear is only hit just right now, on top of a lot of other things. I think one of the major things right now is that there's a lot of disappointing earnings. For example, we had Netflix earnings where the stock dropped about 20% because they just missed their subscriber target. On top of that, we had Peloton drop another, I think 40% in a day or something, and they continue to drop even more because they're stopping production and possibly laying people off. And these two stocks, I think, are major ones that have caused a lot of other growth names to fall. And although a lot of the stocks that I'm invested in on this channel right now that I'm showing you guys, they're Canadian companies, they're also affected by the US. And the Canadian economy mirrors what the US economy does for the most part. However, our performance lags the US most of the time. And I think one of the reasons is because we pay a lot more tax. So yeah, maybe we should talk to the government and ask for tax breaks, but that's besides the point. And if you guys have looked at the headlines recently, a lot of these headlines were negative, especially when the stock market has been dropping 10 or 20% for those high growth names recently. Just a week ago, Netflix announced that they're raising their prices in US and Canada. And on CBC, they wrote an article on this and the title was fairly neutral. However, today there's an article commenting on the Netflix price increase saying, "Are we all streamed out?" This goes to show you that media tries to play on whatever the stock market is doing and amplifying that. And I think this in turn also amplifies how investors react. When you read all this FUD in the news, you're kind of prone to selling your stocks on that day. And if the news is great and saying stocks are going back up again, there's nothing to worry about, then investors are also swayed a little bit to buy more. So I think that the news has an effect to amplify what investors are doing and causing these crazy swings. Especially with the internet nowadays, information travels at the speed of light. And when information travels so quickly, people also feel the need to act just as fast. Because if they don't act now, then they could be missing out later on, or if they don't act quick enough, then they could see a major drop in the portfolio. And the reason why news sites are doing this, it's not because they're trying to manipulate the markets. However, you have to realize their intentions are to get as many eyeballs onto their articles. And that's why they have to use these jarring titles. I mean, on YouTube, we kind of do the same thing as well. And you have to realize that we're trying to go for views. So if the author can make a title that provokes you to click on their article, well, they get rewarded for that. And obviously, they're going to try to play to what the market is doing right now in order to get more views. Well, I guess I kind of revealed the secret of YouTube and what I'm doing here, but that's kind of besides the point. Although I do try to comment on what's happening in the market and do have titles that are kind of jarring, at the same time, I try to stay true to who I am and how I invest. I'm not one to all of a sudden buy all these stocks and then sell them the next day. Yes, I do change my strategy here and there, but there's a bit more thought behind it and I give my reasons as to why I'm doing that. I did change my strategy from about a year ago, where I was doing sort of like a mix of growth stocks as well as some dividend paying stocks, and I decided to go all in on growth stocks. And to this day, that portfolio, which I still have right now in Wealthsimple Trade, is still oriented towards growth stocks. I've not sold off many of my positions there. There's maybe one or two which I decided to sell off, but those were short-term plays anyways from the beginning. So for the most part, I'm still holding on, and I guess you could say I'm bag holding on to some of these stocks. But at the same time, I think that if I act now, try to sell and buy the dip later on, I'm obviously going to miss that. Because if I sell now, how do I know that I'm going to have the guts to go back in later on without thinking maybe it'll drop even further? And if the market starts to show that it's recovering, then perhaps I might be fearful and not want to buy in and wait for another dip and completely miss that opportunity. And I think that's a trap that a lot of investors fall into. So for me, as a buy and hold investor for growth stocks, I'm still buying growth stocks right now, maybe not as heavily. However, I'm still putting my money into the market and believing long term that these businesses that I'm buying today will be better off 5 to 10 years or even 20 years down the road. And as I mentioned in a previous video, that there's different players in the market. A lot of the players who drive a lot of volume when the market is volatile are those short-term traders. They're in to make a quick buck, whether they're shorting stocks or buying options. Now the long-term investors, as well as the ones who dollar cost average, they kind of help average out the market so it doesn't have even crazier swings. But I think recently with all this interest in the stock market, especially from younger people, there's been a lot more volatile times because we have a lot more short-term minded people in the market. And if that's your game and that's what you want to do in your strategy, there's nothing wrong with that. But I'm just telling you guys, for me, I'm a long-term investor, and when I'm buying into these stocks that look like they're falling 10, 20, 30% week over week, well, I have a long-term mindset. With that said, let's go over to my Wealthsimple Trade growth stock portfolio, and I'll show you all the positions and whether I'm up or down on each one. You'll notice that I'm pretty much break even. I'm actually a little bit in the red since I started this portfolio about 2 years ago. Yeah, that does suck, but a lot of the small caps, especially Canadian ones that I was invested into, got hammered. But looking at the actual business behind the company, not just the stock price, there's nothing wrong that I found with these businesses yet that has caused me to sell. And now talking a little bit about my TFSA portfolio and what I did last week. Well, last week was a bit of a busy week for me, so I only invested in 2 different companies, and we'll go over those right now. But this week I have about $375 to spend, so subscribe so you can come back next week and see all the different stocks that I bought as this market is crashing. Okay, so jumping over to the TFSA portfolio and showing you what I bought last week and just the portfolio performance and how much I'm down. At the very bottom you can see that I bought 2 stocks. I bought Meta as well as Nuvei. I spent about $56 buying 3 shares of Meta and $30 on fractional shares of Nuvei. Looking at the entire portfolio right now, currently I'm down about 4.72% on this portfolio. In dollar terms, I'm down $515. However, that's all on paper. The current market value of my portfolio is $10,400 or just shy of that. Going over to the entire portfolio and sorting it based on a 1-week performance, the stock that performed the best is actually Well Health Technologies. I'm up around 9% on this position in the past week. However, most of the portfolio you can see is in the red right now. A lot of these positions are down anywhere from 2 to 6%. And these are not just the high risk names, we've also got low risk names like Power Corp of Canada, we've got Air Canada down, we've got National Bank down, we've got RioCan down. These are all not high risk stocks in my opinion. But going forwards, I'm looking forward to adding to a lot of these different positions. For example, I want to add to National Bank next week as it's still a relatively small position and it's coming off of all-time highs right now. So I think if we see a further dip, I'll continue to buy this bank because over the past 10 years, it's been the best performing bank in Canada. Shopify is another one that I'll continue to buy as it's dropped fairly significantly. Now it's one of my biggest losers, down about 30%. Surprisingly, D2L has actually held up fairly well recently. You can see the 1-year chart, or I guess it's not a full year for D2L, but when it IPO'd, the stock price immediately dropped, and then it's been picking up. Even though recently in the past week or so we've had a very bad market, but you can see there hasn't been a very steep drop off for D2L. So it seems like D2L has found some value at around the $14 to $15 range. And lastly, I'll be continuing to add to my Meta position as it's also a new position in this portfolio. And I think right now it has a fairly decent valuation for a large cap tech stock. There's a lot of negativity around Facebook right now just with all the data privacy, so I think people are a bit nervous to invest in this company. But I think in the long term, Facebook will figure these things out and continue and resume their money printing business. Anyways, that concludes this week's episode. I've thrown up a couple videos on the screen for you guys to check out. If you guys are there, I'll see you there. If not, keep up the grind and have a great day.